Good morning, traders. I haven't done a video for a while. I've been working a lot. One of our workers has been out, so I've been filling in the stuff. So we had a major target point yesterday, and I want to point out here: if you base your fibs off the weekly 5 SMA, and we draw it out up into yesterday's highs, and see how these fibs are matching up right at these critical areas. Um, Going into today's session. Okay, 50%, that acted as resistance right there. We break above that, and we're just digesting the move up into the 78.6. Got a hard rejection yesterday on the 1 hour chart, uh, the 9 o'clock time frame. So we were already getting some sell side there at the open. Um, and the fact that we couldn't, uh, the open was below the 100%. That's a pretty significant rejection candle for the week. Okay. And so Tuesday, we were looking these prior all-time highs right here on the green. If I go on 4 hour, you can see better. Okay, let me zoom in here real quick. Okay, and these prior all-time highs right here. Okay, and this is a prior all-time market maker move high as well up in this area. Okay, guys. So our prior, so this was a major breakout point that we're currently trading above today. So we would definitely want to keep this on watch going forward. That was a big deal. You would think we should be good for a back test that has not completed yet. So I definitely want to keep that on watch going forward here. Okay. Another thing I wanted to show you on the weekly. I know I got a bunch of stuff on here. Okay, guys. And if you put your SMAs on here, change that to 5 SMA real quick. And zoom in here real quick. And what I want to point out here, the 5 SMA is currently basically 450. That's our 5 SMA. By next week, that's going to be up to 23,500. And we know that was a major rejection point a few weeks ago. So that suggests to me, we're potentially starting a wave 4. We might have just completed a wave 3 to the upside. And if we are starting a corrective wave and a wave 4 with the Elliott wave, this 23,500 for next week could very well be a very decent target to be eyeing for next week. 23,500 down here for a wave 4 correction. Okay, and this is a diagonal. Uh, I think that's a diagonal, yeah. But as long as we're above the wave 1 high, this is the wave 1 high here. That would still be a very valid in our 5 SMAs up here. So a few little things that takeaways that I'm thinking about here going into next week. And now our weekly 5 SMA is going to be above the wave 1. So, we want to see if that becomes our new support area going forward here. Now, if we were to continue to go higher here, if I go down here on a 30-minute, okay, if we turn this regression channel. Oh, another thing I wanted to point out, I put in my charts. In a really strong market, your anchor points for your regression channel are based off the range highs. Okay, and that gives you an indication that the regression channel is very strong. Well, now all of a sudden, the past few days, that the regression channel anchor point, from what I can tell, how I'm drawing it out, is now based off the swing lows, suggesting possibly a change of tone in tech land now that we've already got NVIDIA numbers out. So be very mindful here. That could be a very leading indicator that we're going to see a cooling off in the Nasdaq for the coming weeks. So week or two. So at the least. So be very mindful of that. Where you anchor that regression channel can be an important leading indicator of what's going on in the bigger markets. Okay. So we're going here. We're going sideways, digesting. We're above yesterday's support, but we're below yesterday's resistance. So we're just channeling sideways in the overnight session here, potentially breaking out of this regression channel early on this morning. We'll see how it plays out here. It could go either way here, but like I said, we potentially have hit a major support, okay, or resistance here. We do have a lot of investors still buying gamma exposure. Wait to the upside. Call gamma exposure to the upside. So just be very mindful. If we start to fail here, it's probably going to be difficult. It's probably not going to be just a fall off the cliff move. It's probably going to be a very difficult move downward in the markets. Okay. Now, if we were to go, we have to keep a close eye on Apple. Apple here, we've come up into resistance, still acting as resistance in the overnight session. So if we were to start clearing above yesterday's highs, then this actually could be a driving force for the market. So basically 235. So basically, I wouldn't want to enter Apple unless we start. This could be a back test, but it's a breakout back test for continuation. I know they've been buying a lot of the 240s and the 250 strikes in the call land. There has been quite a bit of price action in the Apple. But if you're in the bullish case, this would be my top watch on Apple. Okay, going forward into today's session. Okay. Another one that I definitely want to keep on watch here is Microsoft. So we have our regression channel. Put this on the 4-hour real quick. This is our long-term regression channel on Microsoft. The earnings are out of Microsoft. Had a really good run there. This could very well be by the dip. We're holding support very well here. This could very well be by the dip on Microsoft. So I definitely want to keep this one on watch going in here. We're just kind of looking outside of our regression channel. I will have to admit, though, let me show you auto zoom. We're starting to anchor off the downticks instead of the upticks. So be very mindful of that. That's a warning to me that we're losing momentum in Microsoft with the regression channel. So that is giving me a leading indicator. So I definitely want to be very mindful of that going forward here. Personally, I won't be taking this trade idea for the upside move because of the regression channel, how I'm starting to anchor it here. So be very mindful of that. I see a lot of traders talking about Tesla. Tesla going up to back to the 440, 460 area. For this breakout, this long consolidation breakout. Personally, I'm not going to take it until I get better confirmation. Uh, you know, I personally don't like the setup myself. So we'll see how it plays out going forward here. Uh, I do think we're due for a good cycle reset in the markets. Just just be very mindful of that going forward. Meta is still quite a bullish pattern here. I do want to point out here we're 780. Go down here on the 30-minute. So this to me looks like a breakdown, back test. This is a bearish pattern until it's not, in my opinion. So we looked above this breakout. This is proving to be significant resistance. So coming into today's session, I'd much rather be on the bearish side of Meta than on the bullish side. Google. See here. Just digesting sideways. I'm going to bigger time frame. We're into this multiple top area. Google, you're into this multiple top, so we know there's supply up here. So be mindful of that. There is supply, but we are still holding our regression channel. So be very mindful of that. So we're above here. So I would say that is resistance, not support. Okay, that's still resistance. Look, they're shopping to see if they can make that into permanent support. So obviously, we're trading above right here, so be very mindful of that. See if that continues to remain as support in today's session. So if we end the week and we're still holding above that, then I'll change my thesis on that. We did have a strong bounce off of this regression on a tick there, our regression line. So you know, personally, I would not take this short. Just be very mindful of that. It's not set up yet. I was also looking at AMD this morning. We're into a multiple top area. Came up, rejected, did a back test already. I would be looking more to the bearish side on AMD today to see how it plays out here. Okay. I'd much rather prefer to be on the bearish. The risk reward on the bearish side looks much better than the bullish side. I'm not saying that's what we should be doing. I'm just saying that's what I'd be looking for. Amazon. Amazon, we're into resistance. Okay. Um, so let's definitely keep this one on watch. We do have we have had quite a bit of uh, but we've held this area here. We're in the sideways consolidation. Yeah, I can't take the long side on that. This is still looking like a bear flag to me until proven otherwise. I really need to see prices over 227.50 to actually start getting excited to the long side on Amazon. One final thing to think about here. So we're into monthly resistance on our 10-year uh, uh, T-bills, and we've already broken out of monthly resistance on the 30-year. So I'm pretty sure that's what we're going to do here on the ZNs. Besant came out this morning. He's talking about a 1.5% cut in the Fed rate. He thinks it's that high. He's not factoring in the fact we're already having liquidity issues at the auctions. And when you cut that interest rate like that, then that cuts off that much more demand for the U.S. debt. Okay, you're already, not that great of yields. They're okay yields, but then the international community, you're slashing your rates again. How many people are going to be out there and wanting to buy U.S. debt? And Japan's already having a major liquidity issue in their bond market. They even had one day, Tuesday this week or something, they didn't have a single buyer of uh, Japanese the bond market in the Japanese bond market, and so there's definitely liquidity issues building up here in the bond market, and we have to be very mindful of that going forward here. And everybody just wants these lower interest rates and stuff like that, but there's a flip side to that, and it might take some time for this to play out, but at some point in time, uh, it's going to cause a crisis in the bond market. And that will probably be what triggers a much greater reset in the markets. So, thanks for listening. Like my video if you can, and I will see you around. Please leave comments below if you have any questions or if you have any ideas that I should be looking at and stuff. I appreciate the feedback. Thanks a lot.